with our floor show. Joining me now, T3 Trading Chief Strategist Scott Redler and Landsberg Bennett's Chief Investment Officer Michael Landsberg. Scott, let me start with you here. The R word, the recession, is that something you're worried about?
At this point, I don't think so. I think everyone on the street is thinking we're going to have a soft landing. We'll probably have some kind of Goldilocks. We've been seeing the data that way where it's slowing down, but that's what the Fed wanted, right? They raised rates for I don't even know how many times, but they did it to slow down the economy so this way inflation will cool, and they're starting to see that. So at this point, I don't think we're going to be in a recession. If we are, it's going to be a very mild one. And if we start to see numbers that indicate we could go to one, then you'll probably see the Fed cut more than what the street's expecting right now. Because I think right now, the streets, I think they're indicating a 1 basis point cut for the rest of this year. I personally don't think we get that much unless we start getting more recessionary type data.
Michael, how about you? If you are thinking about the R word that's floated around, how do equities perform if the Fed comes in and really signals like they have been that they're cutting rates in September?
I would agree with Scott. I don't see a recession really in the offing at this point. We are slowing down. I'm not convinced inflation is really going to stay low. I saw the Case-Shiller data that came out. We're at a record high last 12 months for housing. So shelter prices haven't come down. So I think that's obviously something that we have to keep an eye on. But as rates come down, there's going to be some sectors that do well. It just depends really on how aggressively they have to lower rates. If they have to lower rates a lot, that means the economy is really stalling. I don't see that. Definitely some fits and starts, but
we're closing in here on record highs. Like I mentioned, Scott, at the top of the hour, less than 1% on the S&P. But my worry is 24 hours from now, we get NVIDIA earnings. How important is it for this company to blow it out of the water to support the rest of the market?
It's very important because at this point, it's the AI narrative, the AI story that's been driving tech. And as of right now, in the last few days, the Dow made a new all-time high. The S&P is close, but the Nasdaq and the semiconductors are still well off their highs. So they're going to need NVIDIA to blow it out and raise guidance. There's a lot of talk about maybe next quarter is a little bit of a slowdown, you know, a pause, but it's getting pushed out. So it's going to be how the street reacts to NVIDIA. So hopefully, NVIDIA put an all-time high in around 140 pre-split. There's a pivot around 130. So traders like myself are trying to position themselves. I'm personally doing a call spread.
Okay.
Because that's meaning I'm defining my risk for upside versus just being in the stock, just in case there is a hiccup and it trades down, which will probably be buyable. But as a trader, you want to define your risk because if you're getting paid for August or September and you're caught in a move that you're not expecting, it's hard for a trader versus investors.
Scott, do you agree? Is this a market that's really, really weighing what we're going to get 24 hours from now to make sure that everything else holds up? Michael, sorry, I apologize. Michael?
Yes, I think to echo what Scott said, I think NVIDIA is not just important for the tech sector, but AI has really gotten into everything. You start looking at between data centers, utilities, copper miners, air conditioning companies. So really, this has to continue to do well because it's almost an ecosystem like I don't think I've ever seen in 30 years that so many things are involved in this. It really has to continue to deliver. It will decelerate a little bit because nobody can grow at 200% quarter over quarter for year over year. But I think that should be a lift for this market if it continues to deliver.
Scott, I want to come back to you and talk about Apple, one of your big picks. I was reading a note from Dan Ives over at Wedbush today, who's estimating about 300 million iPhones have not been upgraded in over 4 years. That the iPhone 16, the big event that we're going to get next week, is this big, massive AI iPhone upgrade cycle. Does that impact the stock?
Yes, and I agree because I have an iPhone that's probably about 4 years old because it hasn't been such great features to upgrade, and the phones are made so well that you don't have to rush. For this new phone to have the AI features, it will get people purchasing a new phone, including me. What I'd love to see them do is the foldable phone. That's being spoken about. If they did that, this stock would be at all-time highs like that because I think they need actually a new phone that they need new accessories and just something different instead of the iPhone 16 or 17. Let's get a new name of a new phone. But with this by itself, I do think it's enough to keep the stock in the same trajectory because Apple's been a great leading indicator. If you remember on August 5th, it was the first stock to rally. Then it was the stock that actually penetrated through all these resistance levels to show that the market could continue to bounce back towards the highs. So I think it's going to be NVIDIA and Apple, which is going to be really important to focus on. Can they continue to go higher to bring the S&P above, the all-time highs, which I believe is like 56, 69-ish.
67, yep. Totally. Really appreciate both of you. Scott Redler, of course, and Michael Landsberg. Thank you for joining me.